Yo, yo, yo. Hey. Hey, dude. Welcome back to the channel, bro. Holy Dude, it's been a crazy couple weeks, hasn't it? I know. It's crazy. It's crazy, dude. All right. Yo. All right, we're going to check into AMC stock here. I hope you guys had a good weekend. AMC looks like down 9% today. Has been on a bit of a cascade downward since its recent highs of $34. That is a pre-market, right? Oh, actually, that was on a open, and you had that big sell off, and then I think that that's when they stalled it out. There they did the halt on the sell off, I believe. But anyway, let's take a look at the chart, see what we think, everything like that. Yeah. So the first thing that I'm doing here, and I tweeted out today, I said, if you lose $22.25, you're probably going down to $20. Ish, right? So, and obviously that's just like a range, but the first thing I would want to do here to better understand this retracement and where we're at in it is I would pull a Fibonacci level, a retracement tool here from the bottom of the move back here to the top, the $34. That's $12.95 all the way up to $34. Let me enhance the size of the numbers on my chart so you guys can see better when you're watching the video. Whew, that should be really big. Yeah, so right now, as you can see, you're actually, you're sitting right on top of your 0.5 Fibonacci, which is at $21.09 or 10 cents, right around there. And you are pretty much fast approaching the this 618 $18.80 to the 6.5, which is $18.22. That would be your golden pocket. You can see here that on this retracement, this is actually a key level that we jumped off of before we rocketed up here to $34.33. So this is obviously going to be a really relevant point. And also, $18, I remember, was a key Fibonacci, I believe, whenever we were retracing down here originally. I remember calling this one out as a potential point that we would see. Oh, or maybe it was this $19.66 that we held as support briefly here. We bounced right off of before we eventually traded in this range here. We were range bound between the golden pocket, the macro golden pocket, and the 0.5 Fibonacci, which was $19.66. So obviously look for support at this 1966. I feel like it looks like a pretty good zone here for you to be jumping off of too, relative to if you're looking at this as a Wyckoff accumulation, or even if it's not a Wyckoff accumulation, but just generally, obviously this is an institutional liquidity zone here, right? Obviously there's accumulation that's happening here. So I would definitely be looking to hold this zone, this $19.46. You could also have a scenario where you kind of have this quick burst down in price. And what that would look like is, because a lot of times your retracement is going to want to go to these local levels. Now, I mean, I know a lot of people will pull, and look, I'm not discounting this, by the way. These Fibonacci is a really interesting thing. Like, you can pull it from a lot of different places and find these relevant zones, right? So, like, for example, if I call it from the bottom right here before you jump off, we're actually sitting on a 618 when it comes to that, right? You're sitting in your golden pocket now. So, and all of these are relevant zones. They're all things that you want to watch. But for me, I prefer, especially on a macro basis, to not look at it from that optimistic standpoint. See that as a zone where you could potentially bounce off of, right? You could probably pop up. But I do think that ultimately you end up going to these golden pockets, especially on a more macro plane. And what that could look like is maybe you just bounce right through here, right? Almost like a spring action, you could say. You just kind of jump into your golden pocket and you jump right back out of it on like a V-shape sort of move. Just like you see, let me think. I mean, there's a lot of examples here, but you see like we gap down back here on the chart, right? You gap down real hard in pre-market, and then you just zoom right up, right? So it would be that sort of recovery move that I would expect on there. That's something that I think that you're still in pretty good shape here. The volume for the peak is the highest volume in the localized trading range, which is a good sign that, bulls were still out to play. And maybe what you're doing here is just a brief reaccumulation before you start to move back up. That would be like that's like the bullish case. If I were to give you, I don't think that you just bounce right off of here right now. I think you have to clear out this $19.50-ish cents zone. I just feel like you have to go there. So even if it looks like this, right, you like triple bottom here, that's also another possibility. You could do that. I know that obviously we were following the falling wedge, right? I mean, we talked about this falling wedge at nauseum on the channel leading up to its breakout. I mean, literally for like weeks we were following this thing, if not months, maybe even months, and we broke out. Now, this is a more bearish take on what could happen. Okay, so prepare your prepare your feelings and your emotions and your angry comments. Get those all ready. Okay, all right. Okay, so a lot of times with falling wedges, especially like a conservative trader, like a conservative professional trader, is actually not going to enter a breakout. They're going to enter a retest of a falling wedge and then getting a confirmed higher high off of that retest, okay? And so what that looks like, normally, just pretend like this all didn't happen, okay? Normally what that would look like is you break out here, you come up here, and then once you get this higher high here, it's pretty good indication that you're gonna continue upward, okay? So once you break the plane of that, okay? So there are certainly institutions that are looking at this and they're saying, oh, it kind of ran by us. They didn't load this dip. They're not gonna load that sort of little retracement like that. But what they could be looking for here, and let's see if there's any correlation with a potential Fibonacci. Yeah, it's hard to say that, but what they could be looking for here is further retracement, where maybe you bounce here, you bounce up, then you kind of fight this zone, you get sent down again, you get beat down some more, boom, right? They're looking for that retest type of move for the falling wedge, and I mean it's kind of hard to draw it as it might happen. And I don't think that it would happen like this aggressively, like over the course of the next week where you end up down there. But I know that for sure that there are people that are out there waiting for that. But now that I drew it, honestly, yeah, I think it would take a lot. I don't think it's off the table. I just think that it would take a lot for that to occur. It just seems unlikely to me. I think that what's more likely is that you're probably gonna find some sort of new uptrend, and it's going to be like a middling uptrend. That was a thought that I had earlier, like when I was looking at it on my phone. Like I was just kind of like chilling. I didn't really chart it out or anything, but you could see. Let's see here. And trust me when I say, I know that this looks silly because I'm sitting here trying to find an uptrend, but trust me when I say that these algorithms and stuff are gonna find, okay, like see, like to me this looks like something that you're gonna experience a bounce on. You might actually right now. Yeah, you maybe you do go up tomorrow. Damn, this is pretty compelling stuff. I mean, the selling is pretty weak here, relative volume wise. As you were going up in price, your volume was increasing, right? I don't know, guys. I think I'm kind of bullish. I know some of you are disappointed. You're like, you're what? I don't come here for that. I don't know. I kind of like it. Now I will say, so if we, and look, by the way, I'm not here to like champion bearish thought or whatever. Like I just know that a lot of people like to hear the other side of things because most of what they hear is the bullish thing. You could make a good case though that what you do is you bounce up, maybe you test like this $25-ish region, and then you eventually break down out of that uptrend. That could be something that happens. It is a pretty aggressive uptrend, all in all. So I don't know. This is a pretty key zone, actually. Now that I'm looking at it, you combine the Fibonacci with this potential trend line. I do like this trend line. And you look at it from that lens. Like say you pull this Fibonacci from here, like this more localized one. Yeah, you're sitting on a 786. We know that Amy likes 786s. Now, the 786 for the larger move, right, from the bottom to the top is around $16. It just doesn't align with the falling wedge. And maybe the falling wedge is just out of the picture now. Maybe we just don't care about the falling wedge anymore. It's possible. Yeah, I think a lot of institutions. I don't. When I was drawing it like that, again, it was just an idea that was in my head when I kind of peeked at the chart. But I just can't see institutions waiting for a move all the way back down to this downtrend line. It just seems absurd. It's a very aggressive downtrend. I just can't imagine. I can't imagine that. Let's look at some resistance points. If we do get that upside, what we could see happen. So this, right? This is clearly a rejection off of this trend line in my mind. How I see it. So you draw the top of the 72-ish dollars here, like in June, and then the 52-ish dollars here in September. You got rejected here in November to December, and then now you see you tried to poke out of it, but you ultimately got rejected back down again by this. Yeah, you're getting into this is going to be an interesting. I think you're going to see some battling. Just looking at the chart here, I'm just having pause here because I'm trying to really like think about it objectively. If you break this trend line, you're almost certainly going to go down to 1786. Maybe not that low, but you're going to go, if you break this trend line now, right? So tomorrow is going to be a big day. If you break down, you're going to go to $18. You're going to go to $17, $18. That's going to happen. I'm just saying, like, 20 is not, I don't think 20 is going to hold. I think you're just going to burst right through it, honestly. Create a really panicky kind of scenario. And then you're going to kind of be sitting there waiting to see what happens from there. And then obviously you can see the 786 down here is to $16. That would be the bearish side. If tomorrow you just bounce, you really could get explosive. You really could get explosive. If you find support here at this $21, you could explode right back up to like $28, $29. As crazy as that sounds, but it could happen in relative short term. So as far as expectations go, I would be just looking at this, and I wouldn't take pre-market. Me personally, I'm not going to be taking pre-market too seriously. But like say it gaps down, right? It gaps down to like $19.95 or $20, something like that. I don't really care about what it does in pre-market because we've seen it time and time again. Those big gap downs almost turn into those crazy explosive moves up, right? You can see it back here on February 24th. You have this like insane gap down kind of move, and then you just rocket right up off of it, right? So shout out to Rocket Astronaut on Twitter. This will find him somehow. What up, dude? But yeah, so honestly, if it were to gap down in pre-market, that would kind of make me more bullish. Like if you were like sub 20 in pre-market tomorrow, me personally, I might be looking at some call options or something like really short term to try and just kind of grab some of the explosion that might come off of that. Because I think that the more likely scenario based on this volume profile that you're seeing here is that you end up battling in this sort of region over the course of the next few weeks. And so maybe you get your breakout here, or it could happen earlier. It could, literally, it could happen at any of these points, right? So yeah, that's pretty much how I'm seeing AMC right now. That's pretty much it. So hopefully you enjoyed. Oh, let's look at some moving averages, because I know like right now we're trying to confirm a reversal. I love using moving averages whenever I'm trying to confirm a reversal. Right here, what I have is I believe this is the 20. No, this would be the 50 and the 200 EMA, and the simple moving average. I'm sorry, so SMA, not EMA. The difference between a SMA and an EMA, if you're wondering, is simple moving average is a literal average of the price over the course of the term, right? So 50-day moving average, it is literally the average of the closing price for the past 50 days. An exponential moving average, or an EMA, excuse me, is when basically it weights the more recent price action more heavily, right? So it still is a moving average, but it gives more. It gives more. What's the word that I'm looking at? It basically gives more strength to the more recent moving average, almost in a gradient sense, right? So if you're looking at a 50-day moving average, days, the 50th day that's being counted, the 50th day from where you are today, has less weight than yesterday does, for example. Okay, so these are the simple moving averages, and I like the simple moving average here because you can see that it actually the 200, which is in blue here, the 200 SMA was actually a pretty clean rejection point here for AMC. You see, you poked right up through it, but the candle didn't even close above it, right? You pretty much got rejected directly off of it and sent back down. What I like here is that on your 50-day SMA, you're seeing this pretty steep curl up, right? And so if you're combining what we've already talked about in this video with that 50 SMA, you can see here that by the time price gets down here, maybe it gets down in this fashion, this SMA can actually, let me get my little brush here. This SMA will most likely converge in this fashion, and it can be a trigger point for the price to get pushed back up. Okay, so that's something that you're going to want to look for, is the convergence of these key levels with SMAs, and then we can look at some EMAs too. I like factoring both. EMAs I use a little bit more for day trading, and then SMAs I use a little bit more for, like longer term. But let's pull those up. Sorry, let me just pull up. Here you go. I'm gonna pull up 3 of these. Let's do. Wait. Okay. Wait. Why does it have SMA in here? What? How did that happen? Super weird. All right, we're going to do the 21 in yellow. Nice and thick. Let's do the 50. I don't really care about the 9 on like the daily time frame. It's just so like, it's a lot, Let's make it thick and purple, dude. And then we will do the 200. I believe the 200 might have been involved in this rejection. Yeah, I can see it's got some involvement. We'll do it red. All right. Let's take all these lines. All right, so we don't have much going on. I keep getting phone calls, probably just scammers. All right, so we have the 21 in. So this is good. You see here. Oh man, dude, you might literally just jump tomorrow, dude. You literally. Let me lock these to daily right quick so that I can look at it. Dude, what are these phone calls, dude? What the hell? Lock it to the. No, that's not how you do that. Time frame. There it is. Lock it to the 1 day. So I don't really care about. I mean, we can. I mean, I like the other ones. Like, if you look at the 1 hour chart, you see the 21 1 hour. Like, I like that. I just don't see it as relevant. Man, this number keeps calling me. Holy crap, man! I'm gonna have to answer this. But let's go down to a shorter time frame. So these EMAs are still representing the 1 day chart. Okay. You can see that you got your golden cross from the 21 and the 50, right? The 21 crosses over the 50. Generally, this is a bullish momentum indicator, okay? You see that you broke through your 200-day EMA, and then you got rejected back down by it. What you want to do is you want to hold this 21 or this 50, and you really don't want to see the 21 cross back under the 50, because if that happens, it's pretty bearish. I'm not going to lie. So you're definitely going to want to see some upward price action in the relative near term, or else you're going to see continued correction. But yeah, that's pretty much AMC. I've gotten called like 8 times by this number now, so I guess I'm gonna answer it and make sure that it's not like literally a family emergency or something. Hopefully not. But yeah, have a good rest of your day and peace out.